What's up traders, welcome to Failure to Displace. In this video we're going to take a look at the New York AM session on EURUSD, where I unfortunately got stopped out for a break-even trade on this particular setup and missed out on this dubious short position, which more than likely would have ended up in a loss because price did retrace right into the top of the stop loss. So I would guess that with spread would have probably taken a loss on that one. I missed that trade in live time, didn't take that setup. Did take this setup, ended up with break even. Let's jump into the charts and see the analysis that led to these two setups. We can see we've got a couple of levels of untapped liquidity below us, equal lows created between the New York PM session and Asia, and then we have yesterday's low as well just below that, so good liquidity below us. Earlier on today we pumped up and we have rejected off the optimal trade entry and this 15-minute fair value gap of Friday's retracement range between the daily high and the New York session low. So we're currently rejecting back towards these levels of liquidity. We do have red folder news at 8:30 and also FOMC later on this evening at 2 PM. So we do need to be aware at this point of taking any trades around this area because this can mess price up, and with FOMC being due at 2 PM, price action in the AM session could be a little bit erratic. In fact, ICT does say to us you're probably best off not trying to trade the AM session, wait till the PM session occurs before you start looking for entries around FOMC time. We're degenerates though, so we are going to take a look at this and see what we can come up with. So we'll start skipping through the price action now. So we are just taking the London session low at the moment. Price is just about to, the red folder news is just about to drop, so there's no trades for the next 15 minutes. Continued bearish price action, so there's no reversals at this point. We have just taken this low. You will be looking for a swing high on the 5-minute at taking that level there. However, little caveat here would be the fact that we are very, very close to taking previous day's low now, so I think there's a high probability that we could take out this low. So if we fail to take this low out, I would be more interested in taking a short position to take the low. Don't need to worry about that because price does drop and take the low. Our break of structure now on the 5-minute is here. So we've got a break of structure with a candle body close, so we've got a confirmed optimal trade entry at this point. On the 5-minute chart we could look for the optimal trade, pull in the Fibonacci from the low to the high. Our optimal trade entry is the 618 here. So we've got a fair value gap, we've got a closure above the range, we've got an order block as well. Price continues higher, so no pullback at this point. What I will note is that we are now back inside the London range, and let's take a look at where the optimal trade entry is for this. So we're at the optimal trade entry of the London range, which is just here. So in hindsight, you could drop to the 1-minute time frame, and let's just see if we do get an option to come short. Putting a relative equal high, the break of structure for the short would be this candle here for a short position. Unless we can take the high again and put in a different swing. So broken structure at this point, we've got fair value gaps, got a breaker block, so there would be a potential for a reversal at this point. We would need to take the entry within a discount of this price leg. So optimal trade entry is actually on that fair value gap there. Take a short position on the fair value gap. Stop loss will be just above the high by a point or so. See if this plays out. So actually we're pulling the fib further down, so optimal trade entry is a little bit lower. So we've got tagged in for a short trade at this point. The price has come back up again, almost stopped us out, not quite. Gone again, not quite stopped us out. So you'll see on the fib, the way I've got my fib marked out, I have one at 1.0712. So these are my fib settings. That's not my fib settings. Where's the fib? These are my fib settings. So 1.0172. This just gives me a couple of points breathing space from the high. So if price does pull back, I don't get stopped out. So that has worked so far. Price is continuing lower, so that's good to see. So you would be targeting at least this swing low here for a potential 2R trade. So there is a 2R trade based on a 2022 reversal at the optimal trade entry of this range. So this is one that I've just noticed. I didn't take this entry in live time, but that would have been a profitable trade. I would be worried taking this because we've got 1, 2, 3 highs here. So potentially risky because this is just building liquidity here, which is what I had seen when I started hunting for my long position. Price continues down, so we are now into optimal trade entry of this price leg. So we've got a fib from the low to the high of the range. Optimal trade entry, we've had a pullback here, so now we'd be looking for a long position as optimal trade entry has been tagged. We've got a fair value gap here, a fair value gap here, and an order block as well. So we're getting a really big deep retracement. This is our swing high on this candle here. So this is our break of structure now for a long position, which is what I was eyeing up. So we need a close above the high, which we have, and a fair value gap. So we have a fair value gap on the high. This is now an order block. These two consecutive down closed candles are an order block. We have a closure with displacement above the swing high, giving us a confirmed break of structure. Again, this is a 2022 model entry, so we would need an entry within this break of structure price leg. You would look to take this at the top of the order block, I would suggest. Now, what I did, this was a trade that I actually did take. I had my take profit 1 at 1-to-1. So I took 50% of the trade off as we swept 1-to-1. Then I was ultimately targeting these relative equal highs here. You can see price pulls back, respects the order block, drives away. We do hit 1-to-1, so 50% of the trade's off now. Leave the stop loss below the low because we are risk-free anyway, having taken 50% of the trade off. So the 50% profit that we've taken here would cancel out 50% loss if we did take the loss. And we are targeting the equal highs here. And unfortunately, price essentially gets into the premium area, consolidates, so you can see a very lack of volume here. Comes back, so it has come back to entry. We had a little bit of drawdown. We're already break even, or risk free should I say. So I wasn't going to break even or anything at this point. I was just watching price action, and sadly pulls out for a break even trade. So the actual trade for the session was the short trade based on hitting optimal trade entry of the London range. So that was the better setup, and then ultimately I'm guessing that we'll be targeting the untapped liquidity from previous Friday's low, previous week's low, which would be the trade. So if you did take that one, you could have potentially been targeting the bottom of the range, which would be 3.86R, or even holding this further down for a 7R trade if price does eventually get there. With FOMC, I'm not quite sure what's going to happen, but you can see up to now, price is driving down really nicely. So my session wasn't particularly great. I took a break-even trade on this one, having closed 50% of the trade off at 1-to-1. the actual bias was wrong. Doing the continuation from London would have been the better trade, aiming for the previous week's low. I hope you found that useful. Not a great session, quite difficult because of FOMC, so this is kind of standard when we've got FOMC coming later on in the afternoon. But we gave it a try. Ultimately, we didn't lose any money, so that's got to be a bit of a result. If you enjoyed the video, please leave it a thumbs up. If you have any questions, please leave them in the comments section down below. And if you are enjoying this kind of analysis, then consider subscribing. I'm trying to drop videos like this every single day, and it'd be great to have you on board. Thanks for watching. I'll see you again in the next video.